Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And tonight, an exciting video because there was a big change in the silver world today where we've been waiting to see how things shake out with the July silver deliveries, right on the heels of record gold deliveries. And the first day of data did not disappoint because according to the reports issued, it looks like JP Morgan is posting 30 million ounces of silver on day one of the July delivery cycle. And let us dig in. First of all, I'd like to give a lot of credit here to Craig Hemke, who was all over this in his podcast today. And actually, Ronan Manley, who was kind enough to send me this, he emailed it to me, although he also posted on Twitter. Yesterday was first intent date for July 5,000 ounce contract. A huge 11,458 contracts stepped up to the plate for delivery, of which it turns out that here you see JP Morgan issued or is set to deliver 5,975 contracts, which at 5,000 ounces per contract is just under 30 million ounces. And Craig put this into great perspective in his podcast today. I'm going to play a small snippet of that, but keep in mind, JP Morgan had zero in their warehouse when the price of silver crashed from $49 in April of 2011. They rushed to open those vaults and started accumulating ever since then. Ted Butler thinks that JP Morgan has as many as 1 billion ounces. What we could see, well, we couldn't actually see the silver, but we could see, and you'll see it here. There's JP Morgan. This is the CME Group report. And you see their total at 160 million ounces, which it's been in that range for quite a while now. I'd say a couple of years, 150, 160. So the change today is that apparently, and we'll go back here. So you see, here's the 11,458 contracts that Ronan cited. Basically 6,000 JP Morgan issuer delivering. And here's JP Morgan's customer account. So now, again, if you want to tell me that these numbers aren't accurate or that the data is outright fraudulent, anywhere in between there, I would certainly accept as a possibility. My one thought on that is that either they're saying they're going to deliver the 6,000 contracts, or if the numbers aren't, I mean, that would be stunning. Or if someone's lying about the numbers, then you would think that would also be stunning for whatever reason, although probably bullish for silver if you're committing fraud with these numbers. But we'll take it on face value and see that, the 6,000 contracts there. What is interesting here, and again, this chart was courtesy of Craig, he highlights how, see, negative 29, almost 30 million ounces go from eligible to registered. You see it switched here. In fact, we're going to cover this article here. You see the chart before that update came out. There you see it was 160 and 151 in the eligible, and that has been updated. There you see 30 million ounces. Now, I wanted to get things as accurate as possible, so I made some phone calls today and feel kind of grateful of the people in the silver world that I'm able to speak with. Talked with David Morgan. He said, well, I'll believe it when I see it when the metal actually leaves the warehouse. He did agree that it is scheduled here, but whether it actually leaves, although when I asked him, do you think it's at least moved from one side of the imaginary line to the other? He said that's possible. So by all means, if you want to speculate whether they're going to somehow fleece people out of the metal or avoid the delivery, it sure looks like it is scheduled there. And I'll play a brief clip so you can hear in Craig's own words what he felt about that, because I thought that was well phrased.
So because JP Morgan was short all the silver and you actually had 17,000 people standing for delivery, Boom! They lost 30 million ounces of their hoard in one day. And
So again, I'm kind of learning this whole delivery and translating these CME reports on the fly here. And I really want to get the language correct. I don't think the metal has left the building yet, but it seems like they've committed to that and have updated their warehouse report. So a few other items here, which fortunately are actually summarized. Craig was really on fire today, I must say. And I know when I bring him on the show, I say he's one of my favorites. And this is the reason why you're seeing here. He had an article for Sprott Money, basically comparing, not comparing, but going through the gold and silver deliveries. And let's see here, starting with the COMEX gold. Over the past several years, as far back as I have records, an average delivery month for COMEX gold sees anywhere from 6 to 10,000 deliveries between 2015 and 19. The highest amount was 15, almost 16,000. And note that April of 2019 saw 7,000, June just 2,500. And again, this is coming off of this April, we saw 31,000 as compared to 7,000 in April. And then June last year was 2,500. And this year it was 55,000. And again, it's not like this is just, I mean, if this was 1942 or something, or in the middle of some time where nothing's happening, but as for anyone who's been watching my show here for any period of time, we've been detailing one piece of evidence after another that, you know, still, when is the official break point? When do you wake up and your price is silver? You can sell your silver for $75 or something like that. Okay, that hasn't happened here, but you know, the day that actually happens, it's, you know, already happened. So at least while you still have a chance to make a decision and you see these signs, and this is really what I've studied for the past decade, thinking, all right, this situation, if my analysis is correct, then this is an Enron in the making. And what are the signs that you would expect to see right before it goes? I think it's safe to say that we are seeing a run on the bank in gold and silver. Going to go back here and pull up this, because here is, I mean, you see what's happening on the COMEX. It's not random isolated data points. Here's the ETFs. You see for the last decade have been going and then have started going vertical in recent months. You can look at gold. It's the same picture. Here's it looks like a 2 or 3 year chart of gold, and I mean, it's starting to go exponential. The Fed's running a hyperinflation campaign. This stuff is happening now. um, I don't know what other warning signs we'll get, but back to here, I mean, you're seeing somewhere, some corners of the investment world actually return to some logic, it seems here. But we'll continue on just the first day of the non-delivery month of July. Already 3,300 contracts. So that's even the non-delivery month is more than last June. Obviously, these numbers are astounding, highly unusual compared to COMEX. Although the sweet spot, of course, you knew I was going to get to silver. And I'm proud of that. I'm cool with it. It's all right. Say I'm like silver more than gold. I'm proud of it. I don't have my got silver t-shirt on today, but all right. So late March, all the headlines that, oh, it's just gold, not the airplanes, blah, blah, blah. But here we go. Delivery totals for COMEX silver dating back to 2015. Largest amount of monthly deliveries was 8,700 September of last year. Keep in mind that was when the price was rising and got up to $19. Smallest was 1,300. Typical month, 3,000 to 4,000. And again, I love that he puts it in perfect context here. So thank you again, Craig. And Then the month of May was the delivery month for silver. Total contracts actually hit 9,000, so beat the previous high of the last 5 years. um, While not a new record, this was still about twice the historical average. And now the next delivery month of July has begun. It looks to be a doozy. When the contract went off the board Monday, June 29th, we're still an incredible almost 17,000 open, 4 times the historic average. Also represents 84 million ounces of silver. And even the 11,000 contracts that are being issued, that's 55 million ounces of silver. Again, let's go back to the so Silver Institute showed a deficit last year, I believe. I think it was last 5 out of 6 years. I may not have their latest numbers. Um, but you can see here, just since the price spiked, here's the COVID spike down, silver gets to, 12 bucks. Okay, so even if we go back here, see about 1150, and so that's almost 200 million ounces in 3 months. And now we have somewhere in the range, it's based on, this is preliminary. It's like those, when they have the election, like only 3% of the polls still in. So it's still early, but I mean, we're discussing a range of 55 to 90 million ounces. While silver supply is down this year, and let's see, will the banks meet all these deliveries? Of course they will, but what will happen in September? I mean, partly something that I have been thinking about, and let's see, I think that was all. One more thing, note the total amount of deliveries is already 11,458. That's nearly 3,000 more contracts delivered on the first day than the entire previous all-time high month of September 2019. So he does give a warning for people like me. Please do not rush out of here thinking that COMEX will soon collapse. The weight of all this demand will eventually lead to a force majeure style failure, but that's very likely not coming this month or next. Um, I think it's possible this month or next. I wouldn't say it's a favorite to happen this month or next. That's my own personal view. CME banks will work to protect the scheme until the last moment. I think that's a great point there. And that's how I look at it, where, imagine if gold, the dollar, the paper dollar is what allows Pelosi, Trump, Dick Cheney, Bush, Clinton. I don't really take sides. I think it's two sides of the same racket. But if all this is financed with paper money and that's what allows it to continue, then, and if you see gold and silver as some barometer of the health of paper money, so maybe when gold finally hits $5,000 or silver is a couple of $100, which could be after the Fed just makes a complete mockery of the dollar to the point where it's not able to be used again. I don't claim to know exactly how the chain of events will unfold, but if that's what prevents all of that money from being stolen by government, the Medicaid fraud, the $30 trillion the Pentagon has lost, and rather than hiring an accountant to go look for it, they just say that no one can audit the statements for the good of the nation. Um, so I fully expect that. Then to me, that's what you're pricing with silver. You're not pricing fundamental downside or anything other than, yes, I expect they'll raise margin requirements or do anything possible to protect the empire, kind of like the devil will pull any trick to fight to protect its own life. So I think what Craig's saying there makes a lot of sense, that, probably it won't end this month or next month, although we can see some sparks before whatever you consider the end. I mean, is the end when the price shutters the door, or, do we finally see silver break above 20? My gut intuition, let's call this based on very little except just things I hear and think about, I wonder if some levels are triggered once it finally goes through 20, especially looking back to what happened in 2016 and the way A lot of stop orders and different technical levels influence the way people trade. So something I will be keeping an eye on. But anyway, let's give a big hand to Craig Hemke and his site TF Metals, where if you put in the promo code SLV, you'll actually get a copy of the Big Silver Short, the audio version. And it's only $12 a month to get access to all of this stuff where he laid it all out. I was darn glad I listened to his podcast today. Few more before we wrap up here. A story several people have sent me, I've seen. China's biggest gold fraud, 4% of its reserves may be fake. So basically, it looks like somebody was making some copper bars, I believe. So I'm sure you'll be seeing plenty more about that in the coming days. Let's see. 83 tons of purportedly pure gold stored in coffers by King Gold would be equivalent to 22% of China's annual gold production, 4.2% of their state. Well, that actually could be stated gold reserves, because my thought there was just, I would say the number is likely far less than 4% if indeed they had some of these counterfeit bars, because this is probably based off their 2,000 tons of gold number that they publicly declare. I've heard people make compelling arguments as many as 40,000 tons. I'll bet it's closer to 40,000 than to 2,000. And whenever Xi Jinping calls me over to their vault and says, Chris, I'm going to tell you how many ounces we really have, all those silly numbers that your Western media reports. Fortunately, you were able to figure out that they're complete Mickey Mouse numbers, and this is how many, and you can broadcast it on the show. But the Chinese government has not called with that offer just yet. Although I would say, that's the kind of reason why you really want to hit that subscribe button and the notification bell, because if you just hit the subscribe button, you wouldn't actually be notified that that particular episode was coming out, which obviously you're going to want to catch. And almost in wrapping up, U.S. stocks finished best quarter in more than 20 years. In terms of manipulation, I know people say, oh, the silver market's not the only one manipulated. They're all manipulated, which is darn true. And I think one of the ways in which manipulation occurs is often not in, some specific action, but shaping the perception in the same way that the Federal Reserve openly manipulates the bond market, but just says, well, we're doing open market operations and this is policy. I mean, that's like, just because they convince everybody to nod along and sew the costumes and watch the theater that it's legitimate. I mean, it really is as silly as it sounds when you say it out loud. And this headline here, I mean, yeah, I guess if you look at, it's like, well, I had $100, I lost $99.99. But with that penny, and I made $1 back. So I got a great return. And I'm not trying to say this to be mean to the economy, but just pointing out how I think often perceptions are shaped by the headlines. And if you're not trained to see these things, can lead to decisions that aren't fully based on accurate perception of what's out there. So by all means, you can interpret it as you like. Just my thought. And finally, in wrapping up, again, a Big Silver Short paperback version finally out there. Craig Hemke, who you heard so much about tonight, was chapter 3 of the book, gave a great interview there, and why I do think all of these things are coming in their rightful time and place, whether it is this month or next or sometime this year or next. But what I can tell you is we will be keeping you posted here on Arcadia Economics. And if you'd like to see some of the latest data from the SLV and Silver Trust and the stunning amounts of metal that are going in there, well, just stay tuned because it is coming your way now.